The moment the Japanese crypto community has waited for is finally here. A 20% flat tax has been officially proposed in the ruling party's tax reform outline. Meanwhile, the National Tax Agency reveals a record $30 million in back taxes collected from digital asset audits, highlighting why this reform is so urgent. And SBI joined forces with Startale to launch a global trust-based yen stablecoin with no balance limits. Japan is fixing its tax code and its payment rails simultaneously. Let's break down the details. Welcome to Japan Digital Asset Weekly, episode 63. I'm Keisuke of Wakyodo and a venture partner at Onigiri Capital, a blockchain-focused VC fund. On December 19th, we had the biggest policy news of the year. On that day, Japan's ruling Liberal Democratic Party and Nippon Ishin no Kai released their tax reform outline for 2026. The headline for us: a 20% flat tax on digital asset gains is effectively confirmed. For years, crypto gains in Japan were taxed as miscellaneous income with a progress rate as high as 55%. This has been the single biggest barrier to individual wealth through digital assets. Under the new proposal, a flat 20% separate tax will apply to trades on licensed domestic exchanges. Investors can carry over losses for up to 3 years. Derivatives and crypto ETFs will also fall under this 20% umbrella. However, there are caveats. This tax break will only apply to specific assets deemed suitable for long-term wealth building, and notably, it excludes DEX and offshore exchanges. As for the timeline, the legal changes are expected in 2026 and the law goes effective in 2027, meaning the new system will officially kick in from the start of the following calendar year, January 1st, 2028. It's a long road, but the destination is now clear. While the future looks bright, the present is still characterized by strict enforcement. The National Tax Agency just released its audit results for the 2024 fiscal year. Audits of digital asset holders rose 14% to 613 cases, resulting in roughly 4.6 billion yen, about $13 million in back taxes and penalties. The average penalty per case was a staggering 7.45 million yen, more than double the average for general income tax audits. This data proves two things. First, the NTA's digital asset squad is becoming highly efficient at tracking on-chain activity. Second, the current 55% tax rate creates a massive tax gap that the government is now eager to close through professionalization rather than just punishment. Moving to payments, SBI Holdings and Startale Group announced an MOU on December 16th to co-develop a Japanese yen stablecoin for global use. Targeted for launch in Q2 2026, this is not your typical stablecoin. Under Japan's regulations, this will be a Type 3 trust-based digital payment method. Unlike Type 1 stablecoins like JPYC, which are issued by fund transfer providers and often limited to 1 million yen per balance and transaction, this trust-based model has no limits. SBI's Shinsei Trust Bank will handle issuance, while SBI VC Trade will manage distribution. Startale will provide the smart contract infrastructure, likely leveraging their experience with Sony's Sonium network. This is a major step toward managing traditional finance with global on-chain liquidity. Finally, a shift in the media landscape. An Avenue, the operator of CoinDesk Japan, announced it will rebrand Neta News, new atlas for digital assets, starting in 2026. While they are ending their brand license with US-based CoinDesk, they will maintain a content partnership. This move signals a shift toward a media platform more optimized for the specific needs of the Japanese market, integrating news, institutional communities, and the digital asset indices they are developing with NSSOL. At Wakyodo, we believe episode 63 marks the end of the beginning for Japan's digital asset market. The 20% tax reform is the carrot, and the NTA audits are the stick. By announcing a flat tax that only applies to domestic license exchanges, the government is effectively herding 30 million users into a regulated, supervised environment. It is a brilliant, if slightly protectionist, move to institutionalize retail trading. The SBI Startale stablecoin is the final piece of the puzzle. By removing the 1 million yen cap, inviting corporate and high net worth liquidity into the ecosystem. And advice to global projects: if you aren't planning your 2026 to 2028 Japan strategy around these license gateways, you are going to miss the largest wave of capital in the history of the Japanese digital asset market. That's all for this week's Japan Digital Asset Weekly, and your final episode for 2025. The 20% tax is finally coming. Now is the time to prepare. If you found this episode helpful, please like, subscribe, and share. At Wakyodo, we help you bridge the gap between global innovation and the Japanese digital asset market. Thank you for being part of your journey this year. We look forward to bringing you more insights into the evolving Japanese landscape in the new year. Have a wonderful holiday season, and I'll see you in 2026.